Dale, we can't hear you again. Morning.
Thank you, Stel. Good morning, everyone.
Good morning, Mike.
Okay, so we have the S&Ps breaking out through a falling wedge here. Of course, you don't know if you have a breakout till the candle closes, depending upon your time frame. But I'd be pretty careful being short here. Could have a pretty, in-your-face bear market rally, maybe into the elections. So we'll see, especially if it's a surprise and the blue wave doesn't even take the house. So I actually thought that this was going to lead the S&Ps out of the wedge. Similar formation that you have here in Euro as well, right? Falling wedge. So actually today we did something somewhat important. We took out this low, which was 113.35, and this spike low was 31 about. So we made new lows. No confirmation on the 4, on the 1. So we'll see. We really need to get through this 136 level and 113.80, and then the breakouts all the way up here at 114.14. I still can't get bullish on the dollar because of it. It keeps diverging, but keeps grinding for another high and another high. But I'm noticing that this 50-day on the 1 hour is now with the, it's intersecting now with the throwover. So, sometimes that's an omen, even though the market's far away from it, that says that, it could be a magnet for the market to eventually test. That's what I'm looking for, is the throwover to be taken out. And now that lines up with the 50-day on the 4 hour. So yesterday on a turnaround Tuesday, called, we just had a little brief break for about 20, 30 pips. It was here for a successful scalp, and it was about 30 in the euro, and making new highs, coming off. Feels like we're starting to distribute here. And I really think if the market has a chance, okay, the market has a chance to recover all the way back towards 2,800. It's not going to do it with the dollar continuing to accelerate to the upside. And also, with the dollar being stiff, the metals have been giving up the ghost, especially that the yen is still strong. Now, remember, the yen is what made me think all along that we were going to get a recovery in the index and yields. But look, we've rallied to, pretty close to 61.8 if you discount this poke and still take it from here. So now I think we're getting closer to where the yen might need to be sold. I think Blake said we have a false breakout. We could go to 114. That'd be 78.6 back. But I think most of the long side of the yen is done here. I'd be looking for reasons to sell it. I don't see it here. This is not topping action. But I'll be watching it around how it behaves around this 113.60 level. And then that might give some hope to the metals, because the yen has been going up. Metals have been under pressure. Steve showed some charts yesterday that were pretty negative, especially in silver, breaking out to the downside in the triangle. And maybe that was it. Maybe we had all of wave 4. Greg is going to be here. I'm going to ask him, maybe this was all of wave 4. I knew someone that was looking for 46. We got to 43, close enough. Rejected by the 50-week. We're underneath the 2-week off number. Maybe that's it. And now we're just going to get this break towards these lows down here at 11.25 and take out 11.60. That would imply a much higher yen. So those are some of my views, looking for a correction in the dollar before all of that happens. And the euro as well, see if the euro can get its act together and break out to the upside. You still can't even rule out, though, one more test never got down to test the bottom of the wedge line down here. So that's mainly what I'm doing is fading dollar strength, long low euro. I scalp when I have 15.20, I take half off and then move my stop to BE. And if I still like the trade and the BE's been elected, I'll give it another go. So with that being said, let's have a great day. Of course, what would make your day better would to become part of our family here at ForexAnalytix, so that you have the dashboard and the traffic light page at your fingertips. Webinar online. Okay, interesting.
You heard that, right?
Yeah.
Yeah, people that have actually either logged in today after the first webinar began or have refreshed their pages, they have their opportunity, and I hope they're going to have more of it, to hear actually Amanda's voice, because she lended her voice for the webinar online
Okay.
voice memo. Yeah.
It sounded like kind of like one of those robotic women.
It's it's with a serious British accent. But, nice.
Yeah.
Well, the way she trades, she's a machine, right? So I think that's
she is a machine.
Exactly.
That's right. That's right. All right. So and you could hear Amanda live, not just a recording of her in the chat room every day. And like Stelio said, she's a machine. She shares every trade she does in there. So that's another great advantage. Go ahead, Buck. Go ahead.
And I have high hopes that we might soon have her on the webinar. We already have like a detective looking into her, skeletons in the closet. When we find something strong enough, we'll blackmail her with that, so we can actually have her on the webinar.
Okay, I'd love to talk to her. And so, guys, if you're not a subscriber, you got to at least try the trial. Okay. I mean, risk a buck. And, if you're not happy with the buck, I'll refund it to you. But, risk $1. In 10 days, you'll know after the first couple of days. There are lots of trading ideas that get put out by the team. We call them pattern and plays. Okay, so you're only seeing the tip of the iceberg in face. You're getting, 10 minutes of what I'm thinking, and same with Blake and Steve a little bit longer. And we bring Greg is going to be with us today, and Andre comes in. But really, the heavy lifting is really all done here from your dashboard, where you get you get candlestick, you get basic tech on Euro, you get harmonics. I think he's still alive. And you get Greg as Elliott. Okay, so I can't think of one reason not to try it with $1. That's the way I mean, they're like matchsticks, aren't they? And also the team, and don't forget in the chat room. And Paulie, another feature that the guys brought in was European crossover in the morning. That's only available to subscribers, where Paulie's giving you scalp numbers and running through his bias chart every day.
And let's not forget that he's also very active in the chat room, and he's also doing updates. And Paulie is a machine as well. I mean, he's so dedicated to the markets, like very few, honestly. For those that have been tracking,
Blake used the metaphor. He's a bulldog. He doesn't he doesn't let go. They chomp down on you, they don't let go, they stay with it. So also you have to meet our friends and associates and sponsors, Trent and Justin. Call them to say hello. You never know, just in a conversation, introduce yourself. You never know when you might want to shop for another place to trade, and then you have your contacts, you'll know who to call. So nothing wrong with just calling them and saying hi, introducing yourself, and forming a relationship. It's better to have a relationship before you need it than to need one and go out there and search in desperation for another solution. So make this part of your network, Forest Park FX. And with that being said, Blake, how are you today, buddy?
Good morning, Coach. You know, I'm good. I'm tired as all get out. I'm like, my eyes are just watering right now. I just wanted to point out we have ADP non-farm, so private sector jobs coming out in like literally 5 minutes. A couple quick comments, and so you point out the trend line in the S&P. The S&P, or I think you had it as a wedge. I'm not sure what you had it as, but I'll tell you what, we are pushing up into really. This is the. Here, let me get rid of.
Big resistance.
Yeah, it's a big resistance zone. So you know, we get much above where we're at right now. I'm talking the next 3-4 S&P points, and the S&P is going to start to squeeze. I think we completed an AB equals CD move. We hit the 78% retracement. We hit a long-term trend line spawning back from 2016. And you know, we found support. So you know, this is the last day of the month. You know, I'm assuming asset managers are going to try to mark up this month a little bit. So you know, I don't know if I would stand in front of the market if we get much higher than it is. I was telling the traders in the chat room, I'm like, you know, this is from a risk reward standpoint, this is the place you want to be short, but it's not a trade I'm willing to take. I don't, after the sell-off that we saw this last, well, I guess that was a couple of days ago, and then you know, the false breakdown and the reversal. I don't know if I really want to be short.
That was like a vacuum. When it went down, it was down like you know, falling off a cliff without a parachute, and then it was shot out of a jet cannon to recover. Like no trades, you know, I mean, air pockets.
Yeah.
Wild.
Yeah, it was, and you know, it's not a capitulative type of move, but it is definitely something
higher. Is that why?
I think I think the liquidity was still
pretty good.
There wasn't, yeah, it was good, but it wasn't like massive, like massive liquidity, but
a nice little three drive you had at the bottom there too, Blake. You see it?
The 1, 2, and 3, yeah, little 3 drive. So, you know, I honestly think we're going back up to 2,800. We're going to spend the next couple of a week or two, you know, bouncing here, maybe through the midterms. I think it's going to be a pretty close race as far as the elections go, but that's really what's going to be the driver, I guess, over the course of the next week, especially next Tuesday. But let's go really quick. Here's the dollar yen, and the dollar yen actually has this double bottom. You know, we have this double bottom. It should lead us to 114 and a quarter, maybe a little bit higher. The dollar yen, as I've been pointing out the last couple of days, it's not moving down. It wasn't with equities, and I think that was a pretty good indication that we were going to bounce. But like I said, ADP non-farm is coming out. We're only expecting 187,000. This is This is from the Bloomberg terminal. I'm going to put that right there so we can see the numbers that hits. We're expecting 187,000 for you know, ADP private sector employment. Even if it's a miss, and we create less jobs than, you know, 187,000, we might see a dip down to like 112.85. I think this would be a great place to be on the long side of the dollar yen, right down here, personally. So you know, obviously, if we have a good number, then we might actually break this 1330 36 level. But the number's coming out here in just a second. Oh, like 4 seconds. Here we go. 227. Good job. Good number. It's a good number. And the dollar yen is, you know, gave us a little bit of a lift. Not really seeing much activity anywhere else. Now, the euro is near its lows of the session. Let's talk about that for a second. So the dollar yen stronger. Ooh, hey, let me move this. Let me put this before I lose it. I say lose it because it goes in the Bloomberg Ether. If you guys have ever used a Bloomberg terminal, things just kind of disappear for a while.
The S&P is catching though a bit, Blake. It's at the highs of the day, so it seems to be affected by it.
Yeah, the S&Ps are rallying here. The dollar is getting a lift. The euro's pushing down towards its lows. The market is expecting pretty strong. It has been expecting pretty strong dollar buying going into month end, and here we are in a month end. So, see if the euro can push to new lows. I actually have some bids down at 113. I'm hoping we push through these lows here, right through this. This 113 like 17 level and kind of press the new lows. I don't know if we're going to get it, but that's kind of what I'm hoping. But the euro dollar is still trading really heavy. The pound's actually got a pretty good lift today. The pound shook me out yesterday. I got out at like 127.20 or something like that. I just didn't want to risk it going through these lows. The cable really has to get back above 128 for it to look constructive, or potentially like it's going to squeeze higher. But I do believe with the here, let me show you guys this really quick. I don't always like to reference the daily sentiment index, but when it's when we have some extremes here, this is extreme. This is from last night. This is the dollar index registered at 95. That, and you got the euro at 9, the Swiss franc at 9, the cable is at 15, silver's down at 15. You got some pretty extreme readings. So any euro weakness, and this is why I had a bid at, I have 2 bids actually at near 113 in the euro. My thought was if they go for the stops at 113, I want to be there to be on the bid. It didn't trigger. We didn't get there yet, but I want to be on the other side of this. If the dollar strengthens to a point where it starts to, push the euro to these lows, I think we could match those lows and then bounce. Because the daily sentiment index is just so out of whack and it's so extreme. Now, the couple other things I want to point out. So the Aussie, I'm playing this to the long side, and I alluded to it yesterday with the Aussie that it wasn't going down with stocks going down. It was actually holding up pretty well. Australia's CPI came in weaker than expected, and here we are, after the inflation number, we're back up again. And I'll tell you, if this Aussie starts breaking above like 71 and a quarter, 71.50, it's going to start squeezing because it has not gone down. It has not been going down with global equity markets. And if you let's go over to a daily chart. Let's do that, and let's compare this. Okay, you can see with the sell-off in equities, the Aussie came down a little bit and it hit new trend lows, but it's holding up pretty well. So if the S&P really starts to bounce,
Nice point. The Aussie's not scared on Halloween of that big parabolic decline in the market. You can't scare Aussie. Boo, Aussie.
You're way into Halloween today.
Yeah.
I tell you what,
I think saw your costume. You're way into it.
Oh yeah, tonight I'll have to don that costume again. Yeah. And I'll tell you what, I bet you bought a big bag of Reese's peanut butter cups, and you're not even going to answer the door when kids come to the door tonight.
You know me so well.
I know. You threw those suckers in the refrigerator, and you're eating them one by one. And
yeah.
As your wife takes your grandchild, trick or treating, you're gonna be eating that crap. I know it. I would be doing the same thing.
I've had 100,000 of them already.
Sorry, there's no one here. Please go to the next house.
Yeah.
Leave
your trick.
Yep. Okay, so as far as I was going to point out a couple other majors, so the Kiwi also holding up pretty well. Now, this is another example of currency that is not. Oh, there goes the S&P. It looks like we're crossing. I had an alarm here that in case we were crossing this trend line, so we are actually breaking out here. So we're breaking that high. Yeah, you got to watch this stock market. Looks bulled up, man. I wouldn't want to be short equities here. Anyway, this is another example of a currency that has not gone down with equities. Is the Kiwi. Now, I don't want to get too bullish of Kiwi yet, but I'll tell you what: if we come out of this channel, we break 65.80. And I've played this thing to the short side many a times over the last 2 weeks as we were up around 66 cents. Well, I'll tell you, if we break that channel, we could very easily be back at 68 cents, which is, you know, I would use that as an opportunity. I'll just draw this out for you. I mean, if we you know, rally up here to 68 cents, you got to use that as a selling opportunity. I think that's the way to play it. But that doesn't mean we can't get a 200-300 pip squeeze in this bad boy if we break above, you know, this resistance. So I think you need to keep an eye on the Kiwi. So the Kiwi looks pretty stout. It's holding up pretty well. Now the Swissy, this thing has been out of control strong, and I just sit here and watch this thing in awe every day, thinking that it kind of like those other pairs, it was going to turn down with equities, kind of like the yen. Yeah, nothing to it. You know, it's not. It's holding up really well. We could very easily, you know, squeeze up here and finish this flag pattern. I think a lot of people have been trying to lean into the dollar Swiss, but it's not going down. And you know, if it's not going down, it probably only has one other direction to go, and that's potentially higher. Now, the one thing I have to mention with, you know, both the dollar yen and the dollar Swiss, we do have, you know, a very ridiculously high DSI reading with the dollar. So, you know, if the dollar comes under pressure across the board, you know, will we see dollar pressure against the Swissy or the dollar yen? It's possible. I kind of treat the dollar yen and the dollar Swiss, they kind of move on their own program. That's, you know, the flip side of that. We could see a really big rally in like the Euro Swiss or something. So just note that the dollar Swiss is really pushing up against key resistance here. The dollar Canadian's in a tight triangle. We do have, wait, hold on. We do have Canadian GDP here in just a few moments, so that's what I thought. For some reason, I thought my timing was off there, but that could probably move this dollar Canadian out of this triangle. So just keep an eye on the dollar CAD here in the next 6 minutes. The peso has been very strong. I think people are a little worried with you know, the U.S. sending troops to our friend and neighbor's border. When you're sending, you know, 5,000 troops to the border, that's, you know, pretty scary. And I think people between that and you know, AMLO canceling the new airport and all this, you know, money that would have been used to really build the you know, do some good as far as jobs goes, been canned. You know, the Mexican peso looks weak. You know, if we get some risk aversion, this thing's going a lot higher. I mean, it's going up with the stock market going up, which is unprecedented for the peso. So, you know, could we see another, you know, move to 2050? Yeah, I think it's possible. I wouldn't want to be short it right now. I tried shorting it earlier this week, and I got run over like a freight train. And some of the Nordic currencies, they're pretty well bid, but you know, I think you got to watch the dollar today. I don't know if I'd want to be on the long side, especially after a couple weeks of this rally. Last but not least, and then I'm going to turn it over to Steve and Stelios. We talked a little bit about the dollar yen, but the dollar yen, for those of you that are looking to sell the dollar yen, which I would love to sell the dollar yen. I'd like to short it. Not right now, though. I think if we get above the 618, we are going to, you know, complete this double bottom towards 114.25. And then this is a ton of resistance. I mean, we've been up here so many times, you know, near 114. So, you know, you get us above 114, which is another 70, 80 pips away from where we're at. We get above 114. I'm more than happy to start looking at shorts in the dollar yen. Right now, I wouldn't want to stand in front of that, not with equities plowing higher. That's not the trade I'd want to be in. Right now, the US dollar, Japanese yen, like I said, we had a false breakdown, double bottom. So I'll reiterate, double bottom, you know, you can do it like that. Like double bottom, false breakdown leads to a breakout. Okay, so the dollar yen looks like it's going higher. I almost put that as a pattern in play yesterday. I was hoping for a dip below 113, and I was going to initiate a pattern in play. We just hadn't got that, not while I was awake, and you know, we came really close to 113. I just, you know, it kind of fell off my radar. So anyway, I think the dollar yen, you know, does look pretty well bid, and ADP numbers have kind of confirmed that the dollar should, at least the dollar yen will probably, you know, retain its bid, especially with equities going higher. And I'm going to leave, matter of fact, I'm going to leave the equity markets and everything else to my colleagues. And I know Grega is coming on today.
Just pass it on to Grega. He's already here, Blake. Yeah, he's here.
I didn't really want to talk to Grega, but
yeah,
hey,
I know.
Are you here?
he's an annoying guy.
How's it going, guys?
I'm quiet in the corner.
Well, you know what? I'm going to take you out.
To get out, I'm loud.
I'm going to take you out of the corner because I'm sure everybody wants to hear your analysis of the markets. I'm actually passing you the page and the screen, Grega. You know, the S&P looks like we've got a pretty good bid today. What do you make of the S&P here?
Well, actually, it's still. I still think that we may see lower prices here for this wave C drop that can take us back to these February levels. Since I'm tracking a flat correction, so today's price action I think can be very important, because if this is going to be the case, if we really are headed lower, I think that we are now at some very important resistance that should hold. Because I'm tracking a 5-wave drop. Let me just remove this alternate count to give you an idea. Okay. So the idea is that we are tracking wave C. Now wave C is a motive wave. Okay. So it's part of this flat correction right there. Okay. So this was wave A. This was wave B, a 3-wave move to a new high. And I'm expecting a similar price move to the downside also with a failure break below February lows and then turn to the upside. That would be ideal scenario. So in such case, you would expect 5-wave drop to unfold in wave C. And if we take a look on the 4-hour chart, I still don't see 5 waves down. Okay, this was wave 1, wave 2, an extended wave 3, and now we can be a wave 4. And this is the first resistance that I see tested right here at the former swing low. So I think that today's price action could be very important, but I think that we will slow down, and maybe till Friday, we may just simply go sideways.
Okay, so in the event that let's say that we do get a continued squeeze here, is that going to change your count a little bit?
Yes, in such case. So if we go, let's say, back towards 2800, okay, then I would probably switch from this flat count, okay, which is a 335 pattern, which means I would switch from this count to a triangle count. Okay, but the important is that both counts are corrected. So sooner or later, I think that bull market on stocks will resume. But firstly, we have to see a completion of either of a flat formation or of a triangle. So if we will continue to the upside here, then I really think that for the rest of the year, we may simply stay sideways and trapped in this 300 or 400 point range here on the S&P 500. But for now, because my first primary count is still invalidated, and I know that stock market is still somehow under fear, I would not be surprised if we see another leg to the downside, and then maybe starting to see a very aggressive price. We also have non-farm payrolls report, so maybe this one may trigger some failure breakdowns before we get will rise.
Great. All right. Well, thanks, Greg. Hey, just to let you guys know, the Canadian GDP came in a little stronger than expected. The raw materials price index came in
weaker than expected.
Well, is it really weaker? I mean,
it was expected -0.5%, and he came in at -0.9.
0.9. So inflation's not that rampant, but the GDP number did come in a little bit better than expected. So,
yeah.
And employment cost index actually went up too. So the ECI did go up. So, maybe the dollar Canadian will slip below 131 here. But hey guys, Greg, a great overview of the S&P. I'm going to turn it over to you guys, and thanks for thanks everybody for being here.
Bye bye, Blake.
Bye.
So Greg,
yes.
you are. What is the level for you that switches from one count to the other?
As I said, above 2800, I would probably switch to count. But of course, it depends what kind of a move will unfold towards this level. So if we will continue to be sharp, then as you know yourself, it will be even stronger evidence that we are likely making at least a new free wave structure. But the reason why I'm looking at this potential pattern, like a wave 4 in progress and more downside ahead, is also German DAX, where I'm tracking here, go to the daily chart, where I'm tracking a 5-wave drop out of this triangle that was in place in the middle of this deep correction from since start of the year. So I'm also expecting here to see a 5-wave drop here in wave C as well. So actually those two accounts goes very nicely together. What is probably the most important at the moment is to look at the intraday charts to make sure if current bounce is really corrective in nature or it's very strong. And despite the very strong S&P 500, I don't see such reaction on DAX here.
On the DAX, that is very true. That is very true.
Yes. So
and if we may add to that, despite the Euro USD being on the defensive, I mean, you can't even blame it on the Euro, the fact that the DAX is underperforming.
Yes, and also, as you know for yourself, a little bit of Elliott wave structures. The important is that we are seeing here a triangle correction in the middle of this rise, right? So this is a 15-minute chart, which means that this is a triangle that we are not in a new impulsive bullish turn, but rather it's a corrective rise. And also what I'm seeing here is this gap from October 22nd. And I'm expecting this gap to be filled.
To get filled, yeah, before perhaps we move lower, yeah.
Yes, so this, for me as an Elliott wave technician, I mean, this is something what I want to see, would love to see every day, such clear patterns. That's very clear, because we are in downtrend still. We have a free wave rise. We have this free wave rise with a triangle in the middle, which from an Elliott wave perspective, it's confirmation that this is only a temporary bounce. And we also have this gap back from October 22nd. And as you know, when gaps are filled because of unfilled orders, once those orders are executed, again, flows will change and normally market will move into the opposite direction. So
what do you think about the Nikkei that is attempting to, it's about to retest the 22,000 area as resistance this time? Do you have a count for that?
I don't have a count here, but let me look.
Nikkei actually was a very nice, interesting chart. I mean, we were trapped in a range, 22,000, 23,000. It broke up higher, which makes sense. And then when we dropped back in the range, I said that, we're going to go below 22,000. But now we're about to retest the 22,000 area. So I think that has a high likelihood of bringing a rejection, at least initially.
I think that this still can be a flat formation.
A flat, yeah.
Yes, and also we can retest those previous lows. So if I just label the subwaves here. Okay, so ABC down for wave A, ABC up for wave B, and now we are in sharp drop for wave C. So the only question is if this market would maybe bottom lower prices, or it may be already bottomed right there. Okay, but because of dollar yen, I still think that dollar yen, that Japanese yen, will again see at least one more push to the upside, which means strong Japanese yen means bearish dollar yen. So there I have.
Wait a second. Your view on the USD yen that you just said is a short-term one, or you're talking about the medium-term one? So show us the USD yen actually.
For the next.
Okay, so not the short-term one, because I see that you still have a count that is looking perhaps for a rejection somewhere here, right?
Yes, exactly. So
okay.
The idea is that we have seen this reversal down from October highs in 5 waves, and since then, despite this recent test of the lows and the reversal higher, it's still just some kind of a sideways price move. So I'm tracking here an expanded flat formation, okay? And ideally, we are now testing very important resistance. So as I said, S&P is at important levels, DAX is approaching important levels, and also we have non-farm payroll support coming in. So maybe everything will line up till the end of the week and we see a sell-off. But on the short term, at least, even if my long-term prediction for a drop towards 110 is wrong, you would still expect a
pullback,
a 3-wave pullback if this is an impulse. So I think that upside can be limited here, and that we may see dollar coming in, showing up a little bit weak in the next few days. Also, if I bring the euro dollar up here, I think this is very important. If you take a look at this decline from September highs, now I see a lot of, especially on social media, I see a lot of traders, investors are trying to turn bearish on the euro dollar, but volatility was actually very, very low, despite very aggressive volatility on the stock market. So the idea is that here we are making only a temporary decline in 3 waves, okay? And also this third leg of decline from above 1.1620 is slower compared to the first leg here, okay? So also it appears like a wedge here. So the idea is that this
That's exactly what I wanted to say, is that I've actually started drawing it as a wedge in the short-term chart. So I agree with you, it can be a wedge.
Yes, so I think that this can actually be a 3-wave decline as part of still ongoing wave 2. Okay, so I'm tracking idea of a flat, but we can make a retest of August lows. No, maybe after non-farm payroll support, who knows? But the idea is that I think that downside can be limited here, and that we may see another shift here on euro dollar to the upside. So maybe this real breakdown here on euro dollar is not here yet, and if this is going to be the case,
if that's the case, of course, that means that the DXY is going to top rather soon for the short, at least for a period of time. I mean, right?
Yes, and also before we go to the DXY, let me also show you this one. Just a second. Okay, so I have here Bund, okay, and you can see that on Bund. Now, if we go first to the longer term chart, so I'm bullish on Bund. I see only a very slow pullback. I see this as a correction. Okay.
I've been showing the Bund for a very long period of time. Actually, I'm looking at it as a channel, which anyhow, given the very, very, very strong bullish trend, you know, I'm monitoring as a channel, because if you take the beginning of A and you take a parallel with the anyhow, you understand what I'm talking about. You can draw all this from the end of wave 3 to as a channel. So I'm monitoring this as a channel. The price action on, if you look at the long-term chart, is definitely corrective. I've been saying that again and again. I mean, this is textbook corrective price action. So it's a matter of when it's going to break higher. I agree with you 100%.
So the idea is, if this is really going to see more upside here on Bund, okay, that euro dollar may see a continuation to the downside. for a long-term perspective. But short-term, I said that I'm expecting that wave C high to the upside, right? This wave C could drive prices back towards this trend line from 2017 that was broken. So what I see here on the daily chart of Bund is a triangle formation, okay? It's an ABCDE pattern. So actually I will now compare with euro dollar, okay? I will move euro dollar to the downside. So you can see that we have bounced higher into wave D now at the same time when euro dollar was pulling back to the downside to test this August 2018 highs. But I'm tracking here a triangle. A triangle is a 5-wave pattern, A, B, C, D, and E. And notice that wave E is still missing. So the idea is that when we will see a wave E here on Bund, at the same time, I would expect a bounce on euro dollar. Okay.
Any chance you can just count it as a channel, meaning, for example, does any count make sense that would just make it a double zigzag or something like that? Because it channels very nicely. That's why I'm asking. You know, if instead of a triangle, it can. Yeah. If you take the end of wave 3, the high, if there is any chance you can count it like a double zigzag, and perhaps it's not a triangle. You know what I mean?
Yes, but the idea is the same. Even if we would say that.
Of course, it's still corrective. There is no question about it. Yeah.
Yes. So in such case, I would probably label wave 4 end here, and this would be some kind of a wave 1, wave 2, and another wave 1 when wave 2 once we get a pullback. But because of this very choppy, unclear recovery from recent lows, I think that from an Elliott wave perspective, triangle is the best.
It's a triangle. Okay, got it.
Yes, but so the idea is that on Bund, I'm expecting another pullback down for wave E. At the same time, that's why I'm expecting bounce on euro dollar for wave C. So that's all what I wanted to highlight why I think that euro dollar could be also limited. Another thing which I'm using when predicting if we are either in an impulsive decline or just in a wave C, okay, is the following. Notice that here we have seen a break through these October lows, right? But notice that the RSI did not make a breakout.
Yeah, there is an RSI divergence, clearly.
Yes, so it's a very clear divergence. And also you can see here on a MACD as well, right? Yeah. So this is usually my confirmation that we are not in a wave 3 selling off, but probably only wave C. Then if we go back a little bit, you can see here was very similar situation. We have seen a reversal down, a pullback, and a breakdown. And you can see here it was a break.
We got RSI confirmation there, yeah.
Not only that we got the confirmation, it was a confirmation on the same time. So when this previous swing low was broken, you can see the RSI previous swing low was broken and a MACD as well. So why this happened? Because it was a stronger bearish momentum in the third leg compared to the first leg. But this is not the case here at the moment. So for me, I think that this has a personality of a slower price action, but still declining price action, which means that bearish momentum is decreasing. So ideally, from a personality perspective, is wave C rather than wave 3, because wave C is normally slower compared to wave A. In a wave 3,
I would love it if that last wave lower in the euro brought the DXY somewhere. I have a very nice confluence of resistance in the DXY. I was saying it since some days ago at 97.85. That level actually is the 61.8% of the move lower that we had during the whole 2017 bear market in the DXY. So 97.85 is the 61.8 of that move, and it's also the 127% extension of the last corrective move that you've labeled there as ABC, the move lower. That's also there, the 127% extension of that. So 97.85, quite a nice confluence of resistances. I would love to, if we get anywhere close to that, I'm definitely going to be, taking a stab in the market.
Yes. So on the DXY, at least correction again, even if I'm wrong on the euro-dollar call for a bounce up on wave C, I think that at least correction here in 3 waves can be seen because after all,
quality target at 97.11 from my count. 97.11 is a quality target from the first leg higher.
Okay. Yes, I have it here 100%.
Yeah.
Yeah. So, okay. So let me see if I have anything else. Maybe I can show count on gold. I have
By the way, thanks for reminding me. Silver seems to be breaking down, and in my opinion, given the fact that I was showing it since a couple of days ago, I was bullish gold, and I was looking for a little bit higher, a rebound higher, but I've taken profits on my last trade as well, simply because the gold got rejected from a perfect channel, and at the same time, silver, instead of actually making a higher high, it just created a triangle, and I kept telling people that the fact that silver has been making a triangle while gold seems to be getting rejected from equality, more or less an ABC as you're showing there. I showed it as a bear flag. It makes me quite bearish. So I don't know if you agree, but I'm looking for lower lows to be coming.
Actually, if we start with gold, well, we have seen, I was bullish on gold, as you know, for at least 3 wave price. And we have moved nicely into 1235 levels. It was December swing low, which was tested a few times, and we are now seeing quite a nice reversal lower. Also, we have seen,
as I said, if you draw the lines, you'll see that this is also a nice channel. I mean, the ABC also forms a nice channel. You can.
Yes, I know. Yes. I have it here on. I would show it on a 4-hour chart. I have it here.
Oh yeah. There it is. Perfect.
Yes. So actually, and the reason why I like this bearish view, let's say that we are in a wave E, and we are completing these triangles this year. By the end of the year, what I really like about that one is that actually we are seeing a turn down from 38.2%. So if I show you another count, okay, so if I hide this one and actually let's assume that we are seeing wave 2, wave 3, wave 4, and wave 5. Now this is also a very clean wave count with a different approach, but with the same bias. It suggests that gold could continue to the downside. So regarding Aussie dollar, I know that a lot of traders are trying to turn to the upside on Aussie dollar. I would still be very, very careful. I really don't know if Aussie dollar did not see a bounce when we were seeing this gold rising $50 or even more, and even more if you look back from August, then I'm really not sure if we can see Aussie moving to the upside when gold starting to break back to the downside. So I would be very careful with Aussie longs.
Yeah, and as I said, silver feels even weaker than gold. It didn't even manage to make, in essence, it managed to just create some kind of a triangle.
Did you tell this to Stelios?
Yeah, actually, he's been listening in. I know he's not happy about it, but I know that on the other hand, he will be more than content of buying at lower prices. Same here, to be honest. I mean, I own some physical gold. I have absolutely no problem holding even at lower.
Physical stuff, I mean, it's a long road, so.
Yeah, exactly.
More when
but by the way, speaking of which, since I know that a lot of people do own some physical, just out of curiosity, can you show us very quickly a monthly view of what you think gold is going to do? Okay, in the short term, we agree it looks bearish. There is no question about it. I've closed my longs, and I'm even looking to be selling. But what do you think that we're doing on a monthly basis?
On the monthly basis, I mean, I would love to see gold hitting 700 to 850.
Understood. But then what? I mean, how do you? Yeah.
But if this is really a triangle, then I would expect a bounce. And maybe that
when we're talking about a bounce, would you expect that that this whole move lower is going to be a correction to the long-term uptrend, and then we're going to see new highs as a likelihood? So would you be, after you feel more comfortable that we found that C wave, that we've completed that C wave, would you be long-term bullish again? Or what? I mean, what is your long-term view on the metal?
If we just focus on basic Elliott wave patterns, if that would be only a ABC pullback, then clearly once you have a corrective pullback and once correction is completed, the whole corrective pullback should be fully retraced, which means that
new highs
should be tested. So my primary idea of analysis would be to look into the upside, but I'm trying to focus, as you know yourself, I'm trying always to focus on minimum expectations. Yes. And that would be at least 3-way bounce, probably from that area. Let's say that, let me mark this. So I'm expecting prices to move back into this zone. Okay. Mm-hmm. And from there, I would be expecting a bounce back to this very messy overlapping price action that we are seeing now. Highs 2014, 13, 16, 18. So back to those levels. Of course, if we ever get this wave C that I'm expecting.
Okay, I think Stelios will be selling his wife as well to buy gold down there.
But Stelios will probably say that his wife is already gold. So.
Yes, actually she is. If you meet here, he will be 100% right. So what about silver? So let's have a look at. Let's go back to the shorter term charts and let's have a look at silver.
Silver, okay. Silver, it's a little bit more complex.
Yeah, so you also have it as a triangle from what I see there, right?
Yes, and that's probably what's the most important. So silver here, as I'm looking at, I mean, 2008 levels, this swing low from when it was a recession. I mean, these levels could be tested, and maybe something similar could be happening on gold as well. So definitely, as I said, I would not. Once we see a strong breakout, and actually this is already seen as a breakout, right? On the silver, I mean, we are below this trend line. It was also retested. So if we see prices falling through these swing lows, let me switch to the daily chart. Through this, those swing lows from September, then this could really continue to the downside in a very sharp.
And I have this short-term price action that you're showing below the broken trend line. As a basic technical analysis, I have it as a triangle, and we are actually already we've actually already broken below it. So if you zoom in to that wave 2, you can see that you can form a very nice triangle by taking that high. Yeah, that high. That high. Yeah, go close. Yeah, as you see, you can mark this as a triangle. Yeah, exactly.
Yeah, sure. So I mean, if we consider that gold could actually accomplish that ABC rise at 12, above 12.
Yeah, I think that silver is leading. That's what I was looking. I think that silver is leading lower.
It was definitely much weaker. We haven't seen higher highs here on silver, while we have seen higher highs on gold.
Exactly.
So it's weaker, yes. So definitely, I mean, it's just a question of time when silver will probably and gold will be retesting those lows from this summer.
I agree with you.
Okay, man.
Wait, you're not getting off the hook that easily. We haven't checked that crude, and I know that a lot of people are trying to bottom pick crude, but crude looks to me like it wants to move once again lower. So I was short crude. I had a very nice trade here. I'm now completely out of my shorts from 66, but it does look to me that it might want to even retest 64. So I really wanted to see what you think about it.
Now, crude oil completed this 5-way price for wave 3, And we are now, as you can see, breaking this trend line support connected up from June 2017 lows, swing lows. So maybe this trend line can be retested. And on the short-term charts, I will show you. I think
on the short term, I think it wants to go to 64 if you have a look at the short term. But that's my feeling. It feels
yes,
very heavy. Yeah.
To complete this decline for a wave A, but maybe intraday pullbacks will retest this trend line. And if we go to 4-hour chart, you can see that I'm actually observing an incomplete 5-wave drop from the highs, wave 1, 2, 5 subwaves also down for a wave 3, and now we can be again in a wave 4 after this recent spike to the downside. So 67, around 68 is a very nice resistance. Also, there's that trend line that comes in connected from the highs. So I think that upside can be limited, and also, as I said,
and then down to 64.
Zone can be around this big trend line as well, which, if broken, can become a very nice resistance, as you know yourself. So I think that wave A could easily see more weakness, but of course, sooner or later we will see some very maybe even 8-10% rally here on crude oil.
Perhaps probably at the same time that the euro is going to be recovering, if that's the case.
Or when the stocks will be recovering. Notice here the correlation.
Yeah, there is a high correlation. Yeah, there is.
Yes, and also,
so far crude seems to be lagging. Yeah.
Yes, and notice that yes, the S&P 500 actually made a low a little bit earlier than crude oil. So the reason why crude oil was probably put higher yesterday, when it spiked ahead of the US session to the downside, then reversed higher, was probably coming in from the S&P 500 because it was already rising. So maybe crude oil, based on this correlation, was bottoming a little bit later. But still,
by the way, euro at the lows of the day, DXY currently retesting that quality target that we were talking about at 97.11. So far in the session, we're seeing some strong dollar price action. Okay, let's go for a final one before the interview, Gregor. And it is the USD CAD. So the question about the USD CAD is that it keeps flirting and it keeps flirting and it keeps flirting with breaking out of this descending channel, which definitely looks corrective to me. But despite, flirting with it, despite having seen crude underperform, despite having seen some bad data and on occasion, and even some more hawkish BOC, it seems to have died down near this resistance because I'm monitoring it as a descending channel, as I said. So what the hell is happening here? What are, this channel I'm looking for. Actually, I've drawn it a little bit differently, but it doesn't really matter. So what are we doing here? Are we finally breaking out?
I mean, I really think that we will see a break to the upside.
Me too. But time passes and it still does nothing, and it starts getting frustrating. You know what I mean?
Yes, and maybe that's the best thing, especially if you know the types of corrections. I mean, we're just consolidating here, maybe at this trend line that you said. Let me draw it right there. We are still above this trend line, right? So we are consolidating. Maybe a little bit lower support levels will be tested here around 1.3070 or 60, and then we see a push to the upside. But the idea is that we are in a corrective move, maybe even wave 2, sub wave 2, because this was a sharp reversal down, then maybe wave B, which can also be here a triangle, and then we see another push to the downside. But if we're starting to break higher here, above 3160, also if we stay very bullish on Friday after we get this non-comparable data and also Canadian data, I think that really dollar CAD would be poised to see more upside here, and it would be just a matter of time when we'll see a retest of these 2018 highs. Also, as we said, crude oil is turning to the downside for a bigger three-wave drop, which means that in the same period, I would be expecting dollar CAD to continue higher, especially if we consider the dollar CAD was not trading so aggressively bearish despite very bullish crude oil, which was seen in the last 12 months, in the past 12 months.
And by the way, speaking of which, let's also mention
the side of exchange for crude oil to the bear side, then I think this could bring even more bullish pressure here for
let's
gold.
also mention that the USD NOK is approaching a very, very, very critical channel resistance at a very long-term scale. I mean, USD NOK seems to be since January 2016 in a corrective move lower, and we're threatening to retest these. It's more or less channel. Then we're threatening for a breakout there. So, you know, USD NOK looks bullish as well in the medium to long term. So, you know, that would bode well. USD SEK as well. USD SEK has recently broken above a triangle, so this probably has one more leg to the upside. Now I'm talking about longer term scale. If you zoom out in USD NOK, and then that's it. So this looks like a corrective. This looks like a channel correction to me. This whole move from your wave 3. Yeah. So we're threatening to break out from the. Yeah, exactly. If you draw it a little bit better, this trend line, you'll see that, just capture the,
And actually, I like the idea that we are going progressively here higher within a third leg rise. So it can be an impulse, right?
Yeah. Okay. Thank you very much for having, for being with us, Gregor. Coach, is your guest here?
Ivan's in the batter's box.
Okay, perfect. So enjoy the interview. Thank you, Gregor.
Thank you, Wizard.
Thank you.
Bye-bye.
All right. Thank you, Steve. Thank you, Stelios. Hi, Ivan. How are you, buddy? Been a long time. I'm going to pass the controls over to you. I saw your tweet. Looks like you have a lot of good stuff to share with us today. So, waiting to hear your voice and see your screen, my trading warrior brother.
Hey, Dale.
Hi, Ivan. How are you, buddy?
How you doing? It's been a while.
Yeah, what, a couple years?
That's right. I remember back in the old days when we were having that interview with
on FX Street? Are you there? We lost your voice, Ivan.
Yeah, we did lose him. Initially, I thought it was me, but yeah, we did lose him.
Adam Batten and the like.
Oh, here he is.
Oh, okay. Oh, yeah, we did some type of panel interview, didn't we? With Adam?
We were discussing how we would be working out our strategy. Remember?
You're breaking up a lot on me, Ivan.
Oh, you lost my voice?
Ivan, are you on a Wi-Fi?
Yeah, it was back in 2016, I believe.
Okay. Well, you're coming in and out. It's great to have you back. And tell me.
Connect my VPS, see if that helped.
Okay, that's better.
Is it better now?
Yeah, much better. Okay, so it was 2016 we did a panel, or what was it?
Okay, listen, you got any issues, just stop me.
Yeah. All right, you're breaking up again.
Back in 2016, we ran the FX forecast, I believe.
Okay. Yeah, we're having trouble with your audio today.
Okay, allow me.
You're cutting in and out.
It's quite shocking because I didn't have any issues throughout the day. It just happened to be right now while I'm having a chat with you guys. Okay. Well, let's give it a try one more time. Otherwise, I'm gonna be switching on and off my Wi-Fi and see if that works. It'll take a minute.
Ivan, because I have some experience. I had some issues. Do you have a VPN?
I just happened to disconnect the VPN, so hopefully that will help.
Okay, because we can hear you perfectly. Now. Yeah, you sound perfectly now. So perhaps that was the issue.
Excellent. I'm sorry, guys.
Let's see how it goes.
That's okay. That's okay, Ivan. The point is, you're here. We're talking. You have some charts up. Why don't we talk about what you're doing, where you're working now, and who you're collaborating with and helping nowadays?
Absolutely. Can you see my screens first of all?
Got it. We have the S&P and the gold underneath
and you
it.
sound perfectly now, so it's okay.
Excellent. Okay, well, I was the chief editor at FX Street for over 10 years. I spearheaded the strategic planning and the editorial responsibilities up to December 2017. And then I transitioned. I went on a little bit of a sabbatical, went off the grid for a while. And since last August, I have joined a new, I've commenced a new tenure, this time at representing Global Prime, an Australian regulated broker. And yeah, I mean, for the audience, those that don't know me, not familiar with who I am, my profile, been trading and providing expert analysis for over a decade in capital markets. I've been interacting for many years with, you know, and nurturing some top-notch contacts at an institutional level while I was trading at FX Street. That has really boosted my understanding and knowledge of the markets. And nowadays, what I'm doing is my whole purpose is really, I'm on a mission to pass my knowledge about the markets, no filler, no nonsense, trying to deliver as much value as possible. I'm looking at cycles, volumes, levels. I'm looking at the intrinsic valuations or correlations and how we can perhaps find those value trades as well. And I am delivering all this content to both Global Prime clients and those that might potentially be the prospects joining us in this journey. And
well,
as I said,
congratulations.
Yeah, it's I found that
you're a mentor analyst. You moved from the strictly content side to sharing the knowledge you gathered during all those years at FX Street.
I felt that my position back at FX Street, it was excessively editorial in nature, and it wasn't really, I wasn't maximizing my capacity. I wasn't exploiting my capacity, wasn't shining as much as I can potentially do so. And now I feel blessed by Global Prime providing me the platform where I produce tutorials for customers, both at a retail and at an institutional level. I am delivering a daily analysis, studies of the charts. I go through my own proprietary risk models, so to understand what kind of risk conditions we are having in the next 24 hours, potentially based on structures. And then I'm looking at volumes, cycles, correlations. Imagine, for instance, if we are going to be trading euro-dollar, you definitely want to be paying attention what's the Italian premium, what is the German versus the Italian 10-year yield spread. Is it continuously going lower or is it correcting higher? That's going to help us to understand whether or not the euro will justify potentially, if we happen to trade at a certain level, a potential bounce. That's something that I'd like to walk you guys through today.
Okay, and that'd be great. So sure. Where do you access the yield spread on Italian bonds, and you know, what tells you when things are going to be heightened, certain levels, or just a trend of the widening of rates between Italy and, say, Germany?
Yeah.
Or US.
So I utilize TradingView. As you probably know, this is the most accessible platform for those that cannot afford Bloomberg's or the likes, like Reuters Icon. So this is the one that I'm using. And before I really want to set up a little bit of a foundation for those that are listening today, as a trader, you must always be aware that there is this myriad of factors having an impact in the value of a particular currency. You know, it goes from capital flows a country is importing via its equity market, the seek for higher returns on sovereign bonds, fundamental reasons based on economic data or politics even. For example, last year, we saw a massive divergence in the euro. Let me just show you the euro dollar here in a second. I'll find you, there's one chart that I want to show you to start with. Let's see, can I find it? must be. Anyway, last year we saw the major yield spread divergence on the back of the French elections. And that was a political driven event. And that actually was a very sentimental led event. Okay, these are the charts, I believe. Let's see.
Yeah, we left a gap. We left a gap and never looked back for quite some time.
Let me just open so many windows trying to find the one that I want to show you first. Let's see. I don't even know if it's here anymore. Anyway, let's start by, what if I start by showing the risk model that I monitor very first thing every morning?
Sure, buddy.
Excellent.
It's your interview.
Yeah. So basically every single morning, whenever I wake up, I want to first of all incorporate within my studies, what is the context, what are the conditions that we are facing. And for that, you can see here on the bottom right side of my screen, I have what I call the risk sentiment scenarios. So based on the different combinations, here you can see I have up to 6 different columns. So we have equities. So the representation of equities through the European session would be the STOXX 50 or the DAX. They are strongly correlated with each other. And then we would have the S&P 500 that, as we see, we're breaking through this descending trend line in the US session. Now we have the US 30-year yield. That's a great proxy to understand risk on or risk off as well, especially when combined, as I said, with the equities and the dollar index. So when we combine
UND mean up and down, Ivan? UND?
That's right.
Letters, okay.
Otherwise, wouldn't really fit within this 6 screen panel.
So you have risk on in the first column, even though you have, well, you have the dollar down, but the dollar's up. Maybe it was down
the first
early.
column, the first column is what I would call extreme risk on conditions or textbook risk on conditions. That is when the S&P 500, in the case of trading American session, and the US yields are moving in the same direction, going up. And then you obviously see pressure coming down the US dollar. Now we're starting to see a little bit of a paradigm shift where the US dollar, even though it's a high yielding currency, is still acting really well when it comes to risk aversion phases, So in these kind of conditions, it's unambiguous. The risk appetite conditions are going to be present in the market. We're going to see the market emboldened with a sense of kind of optimism, even grit. And participants are going to be looking at selling the Japanese yen, the US dollar, not so much the Swiss franc. Swiss franc, it's a bit more tricky to trade these days. It's not behaving as the typical risk aversion currency as it used to be. It's a bit more piggybacking the euro these days, the Swiss franc. So kind of like this environment is keeping a bit tone in commodity currency.
Why do you think that's happening? Why do you think that's happening? The Swiss is acting that way.
I don't trade the Swiss actively, and in my opinion, I don't think there is a justification I can think of other than this paradigm shift where we just came from an era of Kiwi easing, and now we are kind of starting to move towards this transition of Kiwi tightening. And I think that there is this underlying risk in Europe where you have Brexit and the exposure, that risk that is emanating out of Brexit, and you also have the Italian situation. And to a greater or lesser extent, Switzerland might be also in the mix. And who knows if that might be one of the reasons why the Swiss franc is not acting as it used to be. Not sure if you have a thought there, which I could learn from too.
I don't. I actually stopped really trading it after the depegging, long time ago. I watch it, but I was just curious that you're not getting any flight to quality in it when the market's under pressure.
Yeah. So second column we have.
Go ahead.
Second column, allow me to just continue so we can continuously kind of deliver this value to the audience. So second column, we have when equities go down, US 30-year bond yield goes up, and then we also have that pressure on the dollar index. So in this kind of scenario, the selling of the US dollar and the US bonds, in other words, the higher yields, despite the lower S&P 500, this is kind of a sign that the overall risk environment is still supportive. And somehow the conviction to buy risk currencies, the Aussie, the Kiwi, the Canadian, is not as high. And this scenario obviously would negate if the decline in the S&P 500 is sudden and sharp in nature, but it's one that I still consider to be risk on. And I will assess this based on the structures that I'm seeing. So for example, why did I highlight the column 5 today? Well, because we are in an environment of US dollar strength dominated by higher yields and higher dollar index. So here, why did I write UD? Meaning that when this is the environment that we are faced with, then we need to find some cues out of equities. If equities are breaking higher, this suggests that the overall risk environment is going to be still friendly. It's going to be still constructive to support, especially Japanese yen crosses and the likes of potentially the Aussie. We need to look at the correlations later to understand what would be the outlook. So what do we have today? We have the S&P 500 breaking this descending trend line, and we seem to be now, as we speak, about to find this. What I'm looking for in this hourly chart is a couple of hours of acceptance. If we find that acceptance above this previous swing high, and notice how we have these clusters, and we're coming on the back of this, what I call compression structure. So whenever we have these compression structures, this communicates two things. Number one is either sellers are taking profits off the table, there's not so much conviction, or we might be potentially building some long side action campaign in the very short term. But nevertheless, I pay attention to the structures. So we're having an S&P 500 breaking higher. The Stocks 50 was a front runner, broke actually before the S&P 500. So that to me was a tip yesterday in the European session. As the dollar index was breaking higher, we already had seen this break of the descending trend line. And now we've been buying the dip here. Now we had also this break of the US 30-year bond yield. This descending trend line was determining to me whether or not we would have the foundation to actually build higher highs on the US 30-year bond yield. If that's the case, then it would go full circle on having an environment, especially obviously breaking here the dollar index, an environment of US dollar strength. Then we would have to find the cues through the equities. So first building blocks of the day before sending over the rest of the content to the clients is, what is the context? Are we going to find risk aversion or not? Are we going to find the market that is conducive to your strategies or not? That is the number one foundation that everyone needs to understand in the markets. And after that, we dive into, for instance, let's dive into the euro dollar. For me, it's very important that we have this, what I call, don't lose sight of the forest for the trees. Let's always pay attention, first of all, at the multi-time frame. The sequence of time frames that I always like to see, and I personally trade, is I pay attention to the weekly, the daily, the hourly chart, and then on the bottom right-hand side, you will notice I have also the daily, but here is where I pay attention to the yield spreads. And I'm not sure if I have to go through this one, but this is the correlation coefficient. So basically the blue line is communicating that right now on the daily 30-day period, we are having a positive correlation as it's expected with the German versus the US yield spread, and same applies with the Italian, even though the correlation's been dropping a little bit. The one that I really wanted to show you, just to take home how relevant these yield spreads are, is the 3-day. So allow me just to show you the 3-day. Let's move into, because I think I lost that window. For some reason, I closed it. So if we were to actually look at the 3-day, 30-day period correlation on the euro dollar, if it loads at all, it's going to take more than 10 seconds and it gets stuck. Let's move into the pound. It sometimes happens. Let's reload. Let's see. Okay. Apologize, buddy.
It's okay, partner.
Let's see.
Okay.
3 days. Was it this one? Oh, this is the one I wanted to show you. Got it. Okay, so this is the yield spread, German versus US on a 3-day chart. This is a 3-day chart, and this is a 30 period. This is one of the correlations that a bank the likes of Nomura follows on a regular basis. And this is communicating how much of a lead you can take when following the German versus US yield spread when trading the euro, and at the same time notice how much of a relevance and importance the Italian premium versus the German it's had. This magenta line is the German versus the Italian 10-year yield spread. So by understanding this type of correlations, you can form an opinion as well when trading the euro. And let me then now take you back to the chart that I was supposed to show you in the first place. So this is the chart of the euro. So first of all, what I'm looking at is the weekly. The weekly, I find my perception is that we had this monstrous ride to the upside, and we found acceptance mid last year, and ever since we had a correction. The correction went to the 50% retracement of this move, and notice how much of a confluence it was. I mean, it was a major sticky support. It has become a very sticky support. Now, we have rebounded, and we found a double top right there. Notice how it acted as resistance, and now it's acting again. So whenever I see these conditions, if we are to see a 50% retracement back to the previous swing low, then to me, the market transitions into a range until confirmation of a new low. So to me, now we're still in a range, but we're in danger ahead of the US NFP on Friday. If we find another close below this 50% Fibonacci retracement, and most importantly, if we can close on the weekly below this previous swing, validated swing low, what I call, then we might actually see the kind of long-term target in the euro really evolving towards 1.0845. That's my 100% Fibonacci projection target. That's how I call it. And obviously very much dependable to the outcome of the US midterm elections in, I believe it's 8 calendar days ahead. That's going to be obviously leading up to a reassessment, reevaluation of positionings. So you always obviously have to pay attention to this fundamentals, especially these kind of major risk events. Now, looking at the daily, I'm always paying attention here at the same things, cycles and levels. On the daily, we have a down cycle, and we are evolving in a conducive manner to target the next 100% Fibonacci projection, which, as per my calculations, it would come at 1.1242. So that's the target for the daily on the euro dollar. That's the one that I see based on drawing a Fibonacci that goes from the previous validated swing high through the breakout point. So that gives me a projection 1-to-1 or 100% of 1.1242. Now, looking at the hourly, on the hourly we had this break of a descending trend line, and whenever that happens within a trend, that starts to give me more caution, and I'm starting to call it a poor quality downtrend, even though still didn't take out these highs. Therefore, we were not transitioning into a high cycle. And notice that my structures, my cycles, always orbit around the 50% level. There are many that are going to be applying Fibonacci's of 23, 38.2, 68, 61.8, etc. I only use the 50% to determine the formations of my structures and whether or not we see a bounce or a pullback that is strong enough to make it to the 50% retracement of the previous validated swing high that I mark in my charts or not. And the 70% retracement within a trend, that's the area where I tend to enter trades. I'll give you an example in a minute where I tend to enter trades. And one of the latest trades that I'm in the Aussie against the US dollar, long position filled after today's Australian CPI headline. A little bit of a softish, missing expectations there, got me feel long, even though I'm not really confident on the Aussie breaking much higher. So now we're seeing the euro dollar breaking lower. And if we find acceptance, a couple of candles below this previous validated swing low, we are going to be confirming a new cycle low. So that would allow me to then extend This is something that I do every single day manually, and I do it through MetaTrader. But for the purpose of showing you the yield spreads and other components, I'm just going through TradingView. So we're about to produce a new cycle low. And this is the very last component that I go through and I try to gauge the direction. And here I monitor, and allow me to maximize this chart for a second. Here what I do is, on top of the cycles that I just went through, top-down analysis, I pay attention to number one, volumes, and number two is the correlations. We've already seen that the correlations are a great leading indicator, especially at certain levels. So here, earlier this morning, when I woke up, I saw that, sorry, this is the 3-day. Let me go back to the daily. One sec. Okay. So this is the daily. Early this morning when I woke up, we had these two candles that were about to negate this rebound, this green candle off this support. If I were to minimize, remember, I always have these levels marked. So this is the support that I mentioned right there. So after this support, it was suggesting the market that not yet the cycles were starting to create higher highs, but it was an early warning. Not that it would produce any trade based on my own personal trading approach either, because I need to see higher highs, new cycle highs, but it was an early warning. Now, after these two closes, I have several tips that I can find from the chart. Number one is, even though we're going lower on a tapering of volume. I pay attention to tick volume. Not sure if as part of analytics, you
what's
guys.
What's the message behind a market going down on lighter volume?
Exhaustion.
Okay.
Exhaustion, but doesn't mean that it's not going to stop going lower. It's just giving you an idea. It's just giving you an idea that the market might be exhausting. But first, you might want to be paying attention to where the POC is from the previous day. I have a markup. It just keeps reloading my charts, and now the POC disappeared. But you really need to have some evidence before the exhaustion takes place. After the exhaustion takes place, I mean, otherwise,
like a reversal candle or something like that, at least.
At least, well, in my preference, I would like the POC to be retaken. So if we were to pay attention to where the yesterday's POC is, it's this indicator BPSV, and since I just got the chart reloading, it still shows loading. So let's just be patient until it comes to the chart. But I believe yesterday's POC was about, if I'm not mistaken, from today, about 1.1370 or thereabouts. So I would like to find acceptance, like finding equilibrium above that point would suggest that not only we found acceptance, we found tapering of volume on it, which suggests exhaustion, but we are also having that commitment back from buyers. So that's one of the clues that you can be looking into. A second clue is, are we going lower and in line with the correlations, or are the correlations suggesting that this is a low not being justified? Sometimes you will have a detachment of these correlations and the price just keeps going lower. So
they disconnect.
And why I pay attention here is the following. I'm trying to find in the charts levels of reference. For example, where was the where was the German versus US yield spread? The last time that we touched this level, where were they trading? So we were to find this level of reference. It's right here. It's on August the 15th. This is just one way of actually trying to work out and figure out what is the actual valuations of these markets. So we were trading at August 15 at these levels. Now we are trading lower, and we seem to be right around the same levels, but we are having a little bit more of a sharp fall in both the German US and the German versus the Italian. So that's suggesting that the risk, considering in a holistic approach, remember, when I put my content together, I always suggest clients, you need to kind of have this holistic approach, be pragmatic, and pay attention to every single analysis that I make, both on cycles, levels, and then you can form your opinion. It is very clear to me how I trade the markets. To me, cycles rule anything else. But if I find that there is all the stars the rest of the stars are aligning, then it will allow me to have a greater or lesser allocation in terms of my risk. I might actually go 1% risk, I might go 2% risk. It will also depend on the time frame that I'm trading. So that is the picture that I present to the clients, and you can see today's report, for example, here. So this is FX majors, analysis on cycles, volumes, correlations, and levels, looking into the risk sentiment model, and then we go through FX majors. So we're looking into euro dollar, analysis of the cycles, correlations, the set, what are the drivers, and what are the risk sentiments for the next 24 hours, so that to understand this overall view of the market.
Do people have to have an account with Global Prime to get your research?
No, they don't. It's freely available for every single one that wishes to follow me.
Okay. So all they have to do is go to Global Prime's website and keep in touch with what you're thinking, and they can learn from you.
Exactly. And we now have a temporary block. It's called, well, it's here in Medium, medium.com at Global Prime Forex. We are about to go through a revamp of the website. It's just a 1 month away, maximum 2 months away. And once that is established, once that new website is up and running, I'm going to be able to put all this content together through the new website. For now, I am producing also tutorials, so looking at how to interpret volume profiles, structures, what I call the magic of this 100 Fibonacci projection, why tick volume is important. People can visit this blog and gain a deeper grasp, understanding about different knowledge that I've gathered over the years. So,
well, Ivan, I want to wish you tremendous success with your new position, and your passion is obvious, and also your courage for making change. A lot of people get comfortable after 10 years somewhere, and if you're not growing, you're dying, and you stretched yourself to do this, and I'm rooting for you. And anyone who was viewing this knows where they could keep in touch with Ivan. On Twitter, your Twitter handle has a little underscore on it, but it's Ivan Delgado _EGEA, and you can find him at www.globalprime.com, correct?
Yeah, the Twitter is at Delgado _EGEA. Yeah, that's the Twitter account, and they can find us. They can find us in globalprime.com.au, and just be reminded that Global Prime is one of the top most rated brokerage firms in Forex Biz Army, and that speaks volumes about how we want to care about the customers as first and foremost. So that's,
and everyone can open an account with them except U.S. citizens, right?
That's right.
You take Europeans, you take people from everywhere, but good old God bless America, right?
That's right. Not that I'm making the rules myself.
I know, Ivan. I know. we've got leprosy. It's called regulation. And you guys are regulated by who in Australia? Your regulators are who?
By the ASIC.
Okay. Well, God, it was great talking to you, buddy. And I wish I had talked to you more when I was at FX Street. You really look at everything. So best of luck, good hunting, my trading warrior brother, and thanks for taking some time out to address our community today, Ivan. I thank you for everyone.
Together, but I understand time is limited.
Thank you so much, Ivan. Good hunting. And that's a wrap for us today, everybody. See everyone tomorrow on Thursday. Going to have Callum Thomas with us tomorrow, and enjoy the rest of your day. See you in private members chat, and most of all, don't just count your pips, count your blessings. See everyone tomorrow. Adios.
See you. Cheers.
Cheers, Ivan.